Australian dollar futures start the day struggling, largely due to Chinese headlines or at least angst over the potential regulatory reforms on technology stocks and what that might do to the industries in Asia. So that said, we saw the Shanghai Composite and Hang Seng both drop lower, and Australian ASX 200 after it broke a 3-day winning streak, closing lower and actually closing below its 20-day moving average. Economic data in Australia was a pretty light day, but a good one. Private capital expenditures beat expectations 4.6% versus a consensus of 2.5%. But at the end of the day, the drag was felt with regards to seeing copper prices, coal, gas, and also gold just faltering ever so slightly, dragging it down. Now, going into the meat of the U.S. session, really a lot of hawkish comments that really inspired the U.S. dollar and dragged down the Australian dollar, starting with St. Louis President Bullard, who said it's time to get going. Esther George, president of Kansas City Fed, said it's time to get started on tapering. And Kaplan, the Dallas Fed pres, said, I'm sticking with my September tapering plan. So all that to say, that really did help the dollar. Data, uninspiring, jobless claims and continuing claims both missed expectations ever so slightly. Revised GDP and PCE core spending for the second quarter was basically unchanged. We did have a $62 billion 7-year auction that all eyes were on, and actually a moderate concession, and the stats were okay. Now, regarding CME Group options in Australian dollar, looking at the September options on a 1 to 3 month basis, trading about the 65th percentile. At the money vols are basically unchanged. The up variance and down variance are both higher. However, the put variance is up just a slightly more, and so it's affecting skew ever so slightly. Volume seen, 73 and 74 calls. On the put side, clustered between the 71 and 72 half strike.